From one retail investor to another. This is Trader72. Welcome back to my YouTube channel, guys. I hope you are all well wherever you are in the world. It is a Friday here in London. It's a Friday and it's the end of another long week. It certainly has been for me for various different reasons, but the markets have been very positive. This is actually probably one of the best weeks I've seen for a while in 2026. Now, today's topic is Apple. We will go through Apple in a minute. We may also, on the back end of this, go very briefly through the Netflix results as well, which obviously came out late last night after the US bell was over. So that's something interesting there. There's a few interesting facts, and the fact as well that Netflix presumably at the moment are down in pre-market. But we'll come to that in a minute. Today's topics is obviously Apple. And we're going to go through Apple's business, obviously, where they're at, news, and evaluation as well, which will be very important. Current stock valuation breakdown, future outlook, price targets, as it says there. And I think the question of the day for me will be today, the topic is Apple overvalued or undervalued? And I think that is something that we should be looking at. And also, where is the business at? Apple was obviously the darling of the stock market for many, many years. And recently it's taken slightly more of a, maybe a foot back on the Mag 7. And it's probably not talked about as much in terms of market share, where it's at, where the iPhones are. And obviously we still use them and it's part of our everyday life for most of us in this population. Obviously there's been competition since, but then again, I think you would be safe to assume that most of the population still has a large share or market share of Apple phones in our pockets or in our hands. I certainly have. Anyway, so let's delve into the first part. The numbers we're looking at here, just to start off with, let's start with the key numbers and the fundamentals of the company, and then we'll go through to some of the pros and cons and a few clips that I've got for you guys in terms of what they're up to, what they're doing in terms of going forward. So I think the fundamentals we all know are, would be expected to be fairly strong, and they are indeed. And we'll just have a quick look at this. This is a brief look at some of their, revenue, gross margins, net margins, and all that kind of stuff. So as you can see, revenue growth is still going up between 9 and 7% there. So that's pretty good. The projected revenue moving forward is 6%, slightly come down, but obviously it is an established company now. It's reached its kind of peak in terms of earnings, I think. Although always, gradually still going up, and still very impressive numbers there indeed. We'll skip the P ratio for now and go straight to the look. I mean, the gross margins are still outstanding. 45% or 46% of gross margin, which for any business is pretty much formidable. Net margin after everything's gone out in terms of expenses is the proper end net profit is at 26%. So that again is an outstanding number. We all know that my ORIC is an important part. I mean, in terms of, this is just, like I said, a brief look in terms of the numbers. RIC is still incredibly important there. Free cash flow is up 9%, which obviously free cash flow, as you guys know, is the all-important part there. So free cash flow is up for 9%. Net debt is still about 103 billion, but obviously there's been an expenditure, but not compared to its peers. It's pretty small. Current ratio, which is the cash ratio, is pretty good at 1. Net margin there between the last 5-10 years, CAGR, is 24%. So the numbers here are, let's look at the market share. So let's go first of all to the Q1 and the income statement for the last quarter here, which there is obviously a new Q1 coming up very shortly. Obviously, it's seasonal numbers in the States. So obviously the market share, as you can see from there, is that the iPhone is still one of the major income with $85.3 billion. I mean, outstanding amount, really. This is only just for this quarter. Mac, obviously, follows through on 8.4. iPad, 8.6. Wearables, which actually is quite interesting. I'll give you a clip about that shortly in terms of glasses, competing with Meta's glasses, 11.5 billion. And then others, services in various different other markets, around 30 billion. So revenue so far is 143 billion, with still an outstanding, and what we've just established that already, profit share of its revenue there. 99 billion for iPhone there, and 35% still for the Mac and iPad. So again, amazing. Wearables obviously still establishing itself at some stage, but the EPS there, pretty good as well, overall anyway. So have a quick look at the service revenue. So this is as you can see, still a vast improvement. Service revenue in billions, service gross profit as well. So still very impressive, as you can see from that chart there, as I call it, the staircase effect, and still growing very quickly. The iPhone revenue, now that is also interesting, because a lot of people at this stage think that iPhone is pretty much done in terms of revenue. There's been competition from Samsung, Google as well with its Android, and some people may even think, because it's not been so much at the forefront, that the Apple phone sales has struggled. People are not updating their phones as much as they used to. Times are hard, inflation's up, it's all about consumer spending as well. But it's from this chart, it seems that it's not quite the case. It seems like the iPhone revenue is still moving up. Best quarter ever in the last quarter, and currently at $210 billion. So you can see there that, again, the staircase effect is still very much in effect. We'll come back to the discounted cash flow in a minute in terms of that side of it. But really, it seems to me as if the iPhone sales and the revenue is still in very, very good shape. Pros. We're going to go through pros and cons to start off with. So the pros for Apple. Now let's get to the nitty gritty of the business and what is good and bad at the moment with Apple, and that will give you guys an over idea. So pros and cons of Apple. This is really important. This gives us an overall idea of where Apple is at the moment as a business. Before I start this again, guys, I'm not a financial advisor. I'm not a banker. So please do your own homework on this, and don't invest blindly on what I say. It's very important that you guys make your own path to this. But like I said, I'm here to advise and give a bit of help. So hopefully that will, give you some kind of idea of where to go next, if you wish to invest into Apple. So the pros and cons. Now, let's start with iPhone demand. Still elite. We've just established that really iPhone loyalty is still at 96%, which is a very, very high percentage. And I can see why. Listen, I have updated my phone a few times, maybe not as much as I used to. So I'm probably, maybe some of us are a reflection of where we are at. But still, people are not leaving Apple system, which is, I think, very important. And that gives Apple a huge moat within that business. And I know I go on about the moat a lot, but the 4Ms are what's important. The meaning, which we know about the business, what it does, and the moat is also very important. The management, we know, is established and very experienced since Tim Cook obviously took over. So we know that the 4Ms are definitely a stronghold, and that obviously confirms it there. Big AI upgrade recently, iOS 27. It can now scan food, track nutrition, auto ads, contacts, smart Safari, tab grouping. Let's be honest, recently, Siri's been a bit off, and it hasn't been quite as good as some of its competitors, and I think this is obviously starting to catch up. So scanning physical cards as well. It has a foldable iPhone breakthrough. Apple may have cracked a foldable screen problem using advanced adhesive and ultra-thin glass. So that I haven't seen yet, but that could be quite interesting as well. Record iPhone performance still happening. Record quarter hitting all-times high in the last quarter. So it just again proves that Apple are still very dominant in the Mag 7. Demand still strong despite maturity. And record iPhone performance is still happening. Demand still strong despite maturity. So we've established that there's very much a foothold with the iPhone, and still very much there, and that they are coming with new innovations in terms of AI, affordable iPhones, which obviously some of their competitors have come up with. So now this is obviously quite interesting, and I'll take you through some of the clips after this. So Apple has been behind in terms of AI innovation. So Siri, obviously, as I said, didn't always, I'm not sure if you guys agree with me, please do make some comments below if you do, but Siri, I don't actually use that much. It was very sticky, didn't always answer the questions you wanted to ask. You had to be in a certain environment, and I felt it was quite flimsy, so it never really caught up with, as some of their competitors may have done, and with the AI world obviously improving by the second. So Siri has had a series overhaul is delayed. It has been delayed. Apple sending engineers to AI bootcamp last minute. Apparently, AI chief also left the company. So obviously, clearly, a few issues there. iOS problems, lockouts, poor design, battery. We all know about batteries now. I've got to be honest with you guys. My battery, even on my iPhone, which is I think is 16 or 17, I lose sight of when, you know, times are, what number it is the minute you get it in the first year, it's great. Second year, it seems to falter, and it normally tends to be on a 2-year cycle. Now, I'm not going to make any accusations, so that obviously wouldn't be right. I am only just an investor, but there definitely is an issue with their battery life, which I still think in the days and ages we live now, should be performing better. I know that from a few phone calls, my batteries can run out. So again, make some comments on if you agree with me on this, guys, if you've got the same issue. So security risks, still a concern. Dark sword, hacking threat, warning issues. User forced to update urgently. So that also is quite worrying. But whether or not that is being fixed, I'm sure it will be. iPhone bugs. I don't get often myself iPhone bugs. And again, I'm going back on reflection of myself. But possibly there's been some in the past due to keyboard issues. Great clip idea, etc., etc. Foldable iPhone problems. Now, they mentioned obviously in the cons, in the pros, that this was actually good, but there's been a few delays, engineering issues, early leaks getting bad reaction ugly. So on one side, they have come up with this, but and sorted a few issues, but on the other hand, still are other issues. So that would be, you know, overall some of the cons for Apple. So we've done the pros and cons. Let's now go to some clips just to kind of give us a little bit more ideas and detail to Apple's situation in terms of pros and cons. So here comes Apple's AI strategy. It'll be interesting to see what they say about that.
Turns 50 at a moment when it's losing the AI race, now doing something once almost unthinkable for a company that likes to control its own stack. Opening Siri to rival chatbots and leaning on Google's Gemini models to help close the gap. Now, I talked to the people who helped build Apple, and they all said the same thing. Apple lost the first round of AI, squandering a multi-year head start, in part because the privacy mantra that defined the company also left it flat-footed in a race that rewarded scale, scraping, and massive cloud spending.
So yeah, again, that's interesting, isn't it? Because clearly it's lost its edge on the AI race, but it's now opening itself to Gemini to help reboot Siri, which I think is definitely in need, for sure. So yeah, and potentially need to catch up on some of their rivals. So here, Apple's first smart glasses. Now, that's another interesting idea there, that obviously they're competing against Meta. So let's see what these guys are saying.
Display-free smart glasses. What do we know? Give us a little bit of the history. And really?
Yes, really. Smart glasses, that is Apple's next big thing. They've grown in popularity, right? Tons of people are wearing them, not only in Silicon Valley, but in all parts of the world. Meta has done a great job with their smart glasses. Here, I'll put them on for you. These are the Meta Ray-Ban display glasses, so these have a little heads-up display in them. Apple's won't, like you said, display-free. The idea is that this is the eyes and ears for AI in the cloud, for Siri and Apple Intelligence. These will rely heavily on the new Siri coming in iOS 27 later this year. These will probably go on sale next year. Apple's going to be differentiating here a little bit because they're not going to be working with an outside fashion partner as far as we know. They're going to bring in their own designs in-house for the most part.
So again, AI, you know, and Siri, trying to improve Siri dramatically needs that impression. But obviously, rivaling Meta's glasses, even should I call them, will be interesting to see if how that all pans out. And the fact that they're bringing in-house designers, also we'll see what style they're going to be. So that we'll see what comes out of that. On the other bit of news, just to give you a few more headlines here, Apple stock rises to 2.7% on a new satellite partnership with Amazon. Now, it's interesting because obviously all the Mac 7s are clearly working with each other to improve some of their services, and it looks like Apple is no different. So, again, their shares have increased following new major partnership to enhance satellite features for device. And I think a lot of companies now are looking outside space and satellite to improve some of their businesses. So, clearly, we are looking at the bigger picture and outside out there in the skies. Interestingly enough as well, Apple's iPhone shipment rise 20% in China. Now that was one of the interesting part of information that we got from the trading update Q1 last time around, is that it's clearly is still doing very well in China. And as you will see there, according to preliminary data from Counterpoint Research, Apple's iPhone shipment in China rose by 20% in Q1 2026, driven by the strong performance of the iPhone 17 series. So it seems like the iPhone has definitely put Apple back on the map in China and that side of the world. So it's currently smartphone market of 19% share, just behind UAE's 20%, which enjoys a 90 series shipment increasing by 2%. So a Counterpoint noted that Apple is well positioned to navigate the ongoing global memory crunch, supported by its premium product portfolio and strong supply chain management. It's like to absorb rising costs internally while expanding its market in a share of the near term. So again, very, very impressed there in terms of the shipment and their improvement in China, which obviously is a huge market. Final thoughts on Apple. We'll come to, there's clearly, before we go to the final thoughts in terms of great company and irrelevancy and all that kind of stuff, we're going to go to the current share price. At the moment, the current share price of Apple is at £263 a share, dollars a share. God, I keep saying pounds. Apologies, guys. I am living in London. It's my currency, but there we go. Interestingly enough, the P ratio is currently at 33. It has been in the past at 28, so it is becoming more expensive. And I think we need to kind of keep an eye on that. So as you can see, the P ratio on the way up. Market cap is currently at 3.8 billion. Total debt is around 90 billion, which is, I mean, for Apple, very minimal, and can pay its debt back quite quickly. Apologies there for the stuttering. It's been a long week. So I think that's quite impressive. Year-on-year sales is moving up, but not. It still will be pretty good this year. Maybe a little bit of a drop off next year. EPS is currently 8.52, but going up to 9.31 and 10.34. So an increase year on year. My final thoughts here. The share price is currently at about 263. My estimated intrinsic value, and you guys, I know that I've mentioned this before. Intrinsic price based on a DCF model, 10 years. I'm not going to go through again all the basics of it, but at the moment the intrinsic price comes anything between $185 and $200 a share. So you obviously have to minus the MOS, the margin of safety, on that. And my margin of safety tends to start between the minimum of 25% to make it worth me entering into a trade or into investing into a company. And at the moment, it currently isn't. It actually is, at the moment, overvalued. So really the entry point for me would be around 150 to 140, and that would be really based on my 25% intrinsic price. So the overall picture for me is that it's still a great company, no doubt about it. It's got iconic brand, it's got still a loyalty rate of 96% and a strong ecosystem, no doubt there. Expanding into multiple markets, services, wearables, vision. Fundamental, still incredible record revenues and profit, expanding margin, massive free cash flow, which obviously is a key point to any investment, guys, and strong balance sheet. On the obviously cons, you've got obviously a slight lag in terms of AI execution, Siri delays, innovation cycles slows, so they were a little bit slow on the uptake in terms of AI dominance. But still clearly a power in the market as it stays. They're dominant in premium smartphones and still has a very strong moat. The issue for me is the valuation, really, more than anything else. And I do based on my DCF model and intrinsic price and the margin of safety, it has none whatsoever. It is overpriced, well overpriced, I would even say, at 263. 240 was actually last week. But as you can see there, really, it is way over where I would buy as that. And then, you know, it's up to you guys what you want to do. Some people still, obviously, still a massively good company. It's never going to drop to zero, let's be honest. It's a well-known brand that will be around, I'm still sure, pretty much the next 20, 30, 40, 50 years. I think it's iconic. And so if you guys feel that it is worth buying into a company with those great fundamentals, you know, that is your choice. Like I said, I'm here to just advise. I'm not a financial advisor. So please do take care before you invest. And it is based on about 6 to 8% growth a year. So I've been quite conservative. You could probably argue that $200 is pretty much around the intrinsic price if you were to push the growth number a bit up. But clearly, that is the sweet spot in terms of the actual true worth of the share price. And that is the point of the intrinsic price, that you're not buying overvalued stocks. And it also, you know, manages for you to buy into a stock with an MOS or a margin of safety at the right price. So the right company with the right story with the right stock price. So that is where I feel it is. So really, excellent business. Growth outlook's it's slightly slowing down, but the valuation is also overvalued. So for me, it's a non-starter at this moment. Even so, the minute I would see it drop into that valuation, I would definitely be a buy. So world-class company, but not a world-class price. That's the final thoughts. And so that's where I am at. I hope you enjoyed this. And obviously, please do make comments below on whether you agree with me or not. I'm always looking for feedback. I don't get enough of it since I've started this channel. So please feel free to tell me what you think. So just to finish this off, guys, before we go, I just wanted to quickly run through the Netflix earnings report, which came out last night after the bell in the US. So this was their, I'm going to whittle this through because I don't want to bore you guys to death, and I'm sure you can read it yourself anyway. But interesting quarter, very strong numbers. Streaming giant increased revenue by 16% year on year to $12.25 billion. Operating incomes rose by $4 billion, and EPS went from an expected 0.66 to 1.23, which was very impressive, although there is a slight caveat to the EPS. However, the EPS looking very strong, but it, which obviously beat the earlier guidance of 0.76. However, figures need to be put into context, as it says there, and it's absolutely right. Netflix obviously got paid a one-time termination fee of $2.8 billion by Warner's when obviously the deal did not happen and Paramount got in. So that transaction was recorded in interest and other income, which is quite important. So that has slightly boosted the EPS price. The outlook was important, obviously. Netflix reaffirmed, slightly mixed, and I think this is possibly where the share price may have slightly dropped off. Or I say slightly, probably about, I think, 7 or 8% the last I looked. Netflix reaffirmed its full year at 2026 forecast, continue to expect annual revenue to 50.7 to 51.7 billion dollars. Second quarter, Netflix expect revenue to 13 to 12. So, you know, in terms of operating margins, 32, so slightly down in operating margins. Advertising is obviously going to be the key point, I think, for Netflix moving forward. So all in all, the expectation, the quarter was fantastic, great numbers. A slight pullback in Q2 due to obviously ongoing costs of various different productions. I think they're spending, which obviously is going to affect, but they're expecting a second half of 26 to be stronger. So let's have a quick look at the actual chart. This is based on the 1 week, so this is the overall chart, as far as I'm concerned, the proper chart to look for when you invest for medium to long term. If you're looking at short term, maybe a 1 day or, potentially a 30 to 15 minute chart. But as you can see, a tremendous momentum up since the pullout of the deal with Warner's, which Paramount won. So clearly investors were not that keen on that takeover of the Paramount, especially as the pricing was so high, and also it was going to hit the free cash flow, which obviously again is the lifeblood of the company. So clearly since then it went up from about 70. I probably wish if I'd bought it around there, if I'm honest, and went up quite substantially back up to 101, 106 it was yesterday before the result, and clearly the result didn't go down massively well. It's probably down about 8% on the day, just under around the $96 mark. Again, overvalued for me. I wouldn't buy at 96. I think that the valuation of Netflix is too high for me based on its intrinsic price. I think that something around the 70, 75 mark is where my alarms are. Again, quick look at the markets to finish off with. All in the green at the moment. I sold off my position. I bought into oil yesterday at 101 and sold for a minimal profit, which was pretty good. Visa for me is still just barely in the green. Uber actually was quite a bit in the green. It has dropped out slightly since. Let's have a quick look at my 233 in the green and just about £18 in the green there. So at the moment I could cash on both. I just feel that Uber is a great company and it's still well undervalued. Crude oil position, the other crude oil position I have is still in play, obviously. And Adobe this week's had a very good week. It looks like the SaaS companies are all up. Just saw Salesforce on one of my alarms going back up to 185. And Adobe from last week's low, super low of 225 back up to 253. But anyway, that's it. So please do make comments and subscribe. Please do that. Very important, obviously. I hope you enjoyed my last video yesterday, which was the Adobe analysis, and today's Apples. So that's probably it for me this week. I will be back next week, obviously, with further videos. This week was a bit crammed with my course that I just did. I am going to go and chill out for the weekend because it's been a long week. I don't think I'll be making any further investment until next week, but you never know what may happen. It'd be interesting to see what the markets open this afternoon to finish the week, but it's certainly been a green week. And I think the markets are well up for the week at all-time highs, amazingly enough. What a topsy-turvy 26 it has been. So, from one retail investor to another, this is Trader72. See you next week, guys. Take care. All the best and have a great weekend.